This is the London Fintech Podcast, bringing you practical insights and approaches, stories and inspiration from the innovators who are building the new world of financial services. This podcast is brought to you by NextWave, strategy specialists and solutions for financial institutions. Welcome to the London Fintech Podcast. In this episode, we're exploring the entrepreneurial journey behind one of the fastest growing firms in financial services. My guest today is Mia Drennan, the founder and CEO of GLAS, a global provider of loan and agency services now operating in over a dozen countries. We discuss building a high-performance team, entering global markets and innovating in the private credit space, all while navigating the ever-changing landscape of modern finance. If you're interested in leadership, fintech strategy and scaling a global business, this one's for you.
Hi, nice to meet you.
Great to have you on the show. So where are you speaking from today? Where's HQ for you?
I'm actually in my office, which is at Ludgate Hill. Our global HQ is based on the junction of Ludgate Circus.
Okay, so you're around the corner from me. Well, when I'm actually in my office, which for this recording is not the case, you're not very far away because we're on Bishopsgate. But before we talk about the investment management sector, lending, the GLAS business, can you introduce briefly, tell us a bit about growing up and your career journey leading up to and founding the business?
Absolutely. When I was 13, I was at school. I went to comprehensive school. I had my first part-time job, and that age, paper round evolved into a whole sector of different jobs to support my pocket money requirements as I was growing up as a teenager, but also instilled in me, I think, that work ethic. And so when I got to leaving school, I had two specific goals. I was in the Air Cadets and I wanted to go in the RAF. That was my first idea. Unfortunately, I wasn't able to fly planes, so I decided I'd go to the other passion, which was art and design. And I went to art college for about 2 years. And then ultimately, when I came out of that, I realised that I needed to earn money. Couldn't earn money in that particular sector. So I got on a train, went to Liverpool Street, took my CV around to the recruitment agencies and started temping in the city, which I did for a few years. And that's really, I guess, what inspired my passion to work in the City of London. And I ended up my first proper job, as I call it, at KPMG, which funnily enough is around the corner from where I am here today, which really took me on my journey into professional and financial services from then on in, and then eventually led me to start, well, not only one company, but two companies, of which I'm now CEO and founder of GLAS today.
Yeah, and we'll come to that in a minute. And I love that sort of self-propelled, starting with a paper round. I actually started with one of those as well, but I hated it because I didn't like the dogs, and every time you walked up the garden path. And then picking up your CV and getting on the train and coming to London and hustling your way into your first job. I mean, that's, I think a great illustration perhaps of where a lot of founders start. And just to get to know you a little bit, and we're going to jump into talking about the business in a moment, but when you're off duty, when you're decompressing and trying to relax and rewind, what do you like to do?
So I've got, very lucky that I've got a lovely house in the countryside. So I've got 3 dogs, do a lot of dog walking and relaxing in the house. But I also like to travel and go on holiday. So I can often be found on a nice beach somewhere with something cold in my hand and relaxing when I'm not travelling for business. So yeah, a lot of travel and looking after my dogs. And I've got a 23-year-old daughter who also loves spending time with her when she's at uni.
Yeah. I imagine the dogs probably need their own hotel then for when you're going on a trip.
Yeah, they look like the 3 bears. So there's a dog that we adopted from Antigua who's like a hound, and Briard, which looks like a French sheepdog. So they literally look like the 3 bears, but actually they're not too badly behaved.
They sound quite different. How do you adopt a dog from Antigua?
Yeah, basically, don't ever let your child volunteer in a dog sanctuary on holiday. So the long and short of it was that she said, "Mum, could we have another dog?" At this point, we've already got 2. And of course, I go, "Yeah, of course you can." Yeah, we're never going to get this dog turn up. And then we got a phone call from Gatwick Airport a month later to say that we had a dog to collect. So my daughter's back at uni at this point, and that me and my husband drove round and collected a whoop. Her name's Reba, but she's a beautiful dog. So we did our bit, but very happy that we did. She's lovely.
I guess you thought through as a magic number, and maybe that's the way it's worked out. But that's not always what you expect to come back from holiday with.
No, exactly.
Okay, so let's talk about lending advisory first up, because I just want to set a bit of context on the business. And I think that might lead us in quite nicely to talk about the entrepreneur journey that you've been on and some of the challenges. Can you tell us a bit about GLAS, the market you operate in, and what you do?
Yeah, so just to clarify, actually, it's not lending advisory. So global loan agency services, as was, is really what we focused on, which is loan agency. And we effectively started doing many other things other than just loan agency. So that's where we shortened our name to GLAS, which is what we know by now. But a little bit about the background to where it came from. When I was sort of looking to get back into doing agency and trust business, which is really what I did at my last banking job, which is the Bank of New York in 2005. By the time I'd kind of come through to the beginnings of starting from GLAS, I couldn't work out how I was going to set up my own agency and trust business. And what I identified was there was a real gap in the market for somebody who was commercial and proactive. And this is really where, if you think about the crash that happened in 2008, a lot of creditors have got their money stuck into companies they couldn't get it out of because the companies had borrowed too much money. And so, they were having to go through what we call a restructuring of their debt, which is still something that happens today. But at the time, the commercial banks like the Lloyds of the world, the RBSs and so on, were providing these loan agency services and were, computer says no mentality. And so very, very difficult to deal with. And I really just identified, well, actually, if I could take that service and, basically come at it with the sort of white glove approach, I call a front office approach to a back office service, there might be some real opportunity to sort of start building this vision for, this global loan agency services business. And that's really how it all came together. So agency services is one thing that we do, but we basically provide a whole range of services to companies that borrow money.
Yeah, so I was going to ask you what types of transactions and business goals your clients have. So just to sort of unpack that for me and for the audience, loan agency services, just put that in context. What is it that your clients are trying to achieve, and where do you engage?
Yeah, sure. So, really, any company that borrows money from normally a syndicate of lenders, whether it be banks, and now you obviously see this emergence of all the alternative lenders, such as the debt funds, what we call private credit funds, insurance companies, pension funds. They're all out there lending money to companies every day of the week. So basically, what we do is we sit in between the lender and the company that's borrowing the money, which we would term the borrower, and we facilitate the transaction to happen. So, we collect the money in from the lenders at what we call when the loan actually happens. We make it to the payments onto the borrowers. Then we get the interest and do the calculations around that facility over time. And we hold on to the security. If there's any shares or property, we are the security trustee. So we're really the administrative owner, if you like, and administrator of the loan or bond or other debt instrument which a company borrows. And, that could be anything from, low digit millions to billions. So we just closed our biggest ever term loan B, which was about 6 billion euros about a week ago. So, the financing it could be any amount and any amount of lenders and any particular jurisdiction around the world.
Seems you've found a really strong niche there. Does the end borrower talk to or have any engagement with the lender, or are they really treating you as the provider of funds?
Yes, there are obligations that they have to adhere to during the course of the term of the loan, whether that's an annual meeting with the lenders or, some will do more often, sort of showcase, roadshow their businesses. They've obviously got to send accounts, things like that, which we facilitate onto. But yeah, generally speaking, there is some visibility between the borrower and the lenders. But what gets interesting is when the loans are being restructured. Cast your mind back to things like Pizza Express, Virgin Atlantic. I was just trying to think of some of the big Debenhams, etc. These people have borrowed, huge amounts of money, and then we have to we're very active at this point in managing all the various things that go on around restructuring the debt for the creditors, which can take months and months and months. But it's very, very interesting. We're really unique in doing that, as well as dealing with people just in the ordinary course of performing finance as well.
Yeah, and you said a moment ago that you had broadened the range of services. So there's the agent, the administrator, and you're doing this sort of expert restructuring piece as well. Is there more? I mean, how wide are the range of services that GLAS has now?
Yeah, I mean, basically, there's a whole range of services that, we kind of try to sort of segment ourselves into different verticals, I suppose. If you think about, so private credit is really interesting. I don't know if you've been following the growth of private credit over the last 10 years, but really now being the main source of credit for, certainly middle market and beyond. Providing loans in those particular finance. So, those guys and girls that provide private credit love working with GLAS because obviously we're independent. We're giving them the best service we can. It's tech enabled, and so they really, they want that high touch service because they see us as an extension of them when they're going out to compete against banks to deploy this kind of capital. So we service the private credit market, whether it's agency and trustee services. We're obviously very active in the capital market, so that's really in the bond side of things. So that's obviously, looking at investment grade and above who are raising bonds in different markets around the world. So we provide a range of services, whether it's to service those bonds. I talked about restructuring and bankruptcy services, which is unique, and that's helping people reorganise their debt. And then we're really starting to have a focus now across different asset classes. So I mentioned real estate just then. We have various regulations and licenses that allow us to offer more complex services on real estate, such as dealing with non-performing loans. We're also very much involved in the aviation and shipping logistics sector, project finance, which takes on all sorts of forms, but particularly in relation to renewables, energy, data centres being built very rapidly. So really good sort of sector expertise across the financing verticals that we are operate in.
So you're right across private markets. I had Francesco Filia, the chief exec founder of Fasanara, on this show couple of months back, and talking about fintech lending, and they've got a tech first aggregator of SME loans which really underpins their platform. But so I think that's a bit different to what you're doing, but there's so many aspects of the private market space. And on the consulting side of my business, we work with investment managers who've got listed investments on all the markets, but then the private markets piece is often where the interest is, and that's where everyone wants to get into at the moment.
Yeah, and that's really where our focus has been. But we still, I think what we've been able to do as well, because the banks really don't want to provide these services. In the old days, before GLAS existed, this service that we provide now was done in the back office of the bank. And so, the banks are being hammered for all sorts of things. Is there a conflict of interest? Can they hire the people? Technology constraints. So, they see GLAS as effectively a partner, a strategic partner. We work with them so they can lend and focus on lending and not worry about actually servicing their loans that they're actually originating. So public markets are just as important. We're involved with them as just as much as the private market.
And how important is technology for your business then? Something that's sort of come out of the back office of major banks, and I imagine it has been historically somewhat bespoke and sort of a manual thing. And this is partly what the sector's grappling with, actually. How do I systemize and scale something that's got so many different asset classes and venues and all of that? But for what you do? Technology?
Yeah, I mean, it's been really important. So actually, it's been a funny journey. The first thing we did was we actually built our own platform when we started the business. And a funny story, I won't mention the bank involved, but I think that when I started the company, we did about 400 meetings around the city of London trying to persuade someone to give us a deal. And on one of those meetings, somebody said to us, we want to send the agency manager to come around and see your system. And to which point me and my business partner sort of got up, read fairly rapidly, almost ran back to the office and thought, we better actually put a system together and actually write some procedures because it looks like we might get a deal. And so we built our first system from scratch, which was actually pretty good for what we were doing. And we only had when we got that first deal, we were getting deal after deal. We didn't have the huge volumes coming through. So it did well for about the first 12 or 18 months. And then we realised actually we needed something with a bit more capability. So we then took something off the shelf, which, there was a lot of choice if you're doing the kind of business we are, which we've kind of taken out. We had to kind of get a system that really had been used for CDOs and then had been turned into a loan system, which we've been using ever since. But I guess from the last 5 years, we've been building our own proprietary software to provide client solutions. So we're working on a lot of solutions at the moment in terms of where we want the company to go, which will be into sort of a digital utility in the end, which is going to be all about data. We're on, we're on that journey now. But tech is very much at the forefront of what we're doing here.
Yeah, great. Well, you're on the right show then, London Fintech Podcast.
Yeah.
I love that story. I mean, I've talked lots with guests about product market fit and having commercial DNA for those who are building product firms, having commercial DNA in the team right at the beginning and being sales led and sort of wearing out the shoe leather. So that story about sort of selling the service and then saying, "Oh crikey, we've got to put the ops in place" is a great one. So how big is GLAS now? How fast is the firm growing?
So the company today is over 400 people. I'm sure we've hired some more people this week, so definitely over 400 people. We operate in 10 countries, 10 countries now, with 14 offices around the world. So from the US all the way around to Australia. We are managing over $500 billion of assets under management across our global platform. So, and, we've been growing, serious double-digit growth year on year, consistently. Yeah, I mean, to be fair, we've been actually watching the markets because obviously with all of the chaos in the world at the moment, right, you'd think that that would have an impact on, investment committees around the world and so on. But to be honest with you, just been looking at the numbers today, we're still ahead of where we were in the same Q1 2024 and looking to have a very successful Q2. I think April was one of our biggest months ever in Europe. So we haven't seen a slowdown yet in any financing. So because if there's a recession or something, what you often find is people maybe are indecisive about what they're going to do, whether they need to raise money or what have you, and then you start to see a slowdown in that, but maybe start to see restructuring. Well, nothing has changed at the moment, so people are still moving forward, which I take as a positive. But I guess it depends on what comes out of the US, at the end of the 90 days as to what we start to see happening, if that will have any impact on some of these companies. But I guess tariffs would mean that companies may need to refinance ahead of time or restructure. So that's just good for my business, really.
Yeah, we saw that sort of paralysis in certainly the first 6 months of the pandemic when everything just went on pause while we were all trying to work out what was going on. It's encouraging if you're not seeing it sector wide. But I think listening to you, it sounds like GLAS has been really sort of bucking the trend and growing regardless. And I'm curious, what would you put your success down to on sort of riding out what's been a very, very choppy market for certainly the last 2 or 3 years, in my view?
Sure. No, you're absolutely right. So I do think, certainly with you to be sort of the leading independent agent in private credit, we talked about, and, there's obviously they've consistently really been financing, leverage buyouts, certainly in middle market. So we pretty much deal with the A to Z of all of the people active in that market space. And we have so much repeat business because we obviously have a very strong relationships with a lot of those lenders. So if you think about people like, the Ares of the world, the CVCs, Blackstone, BlackRock, etc., they're raising and issuing huge amounts of debt day in, day out. So we obviously benefit from having those very strong relationships. But I think, again, the fact that we're able to operate in a number of different sectors and markets. So, again, we're the only independent that has certain regulation allowing us to really compete with the banks in the trust market. And so we get huge, and again, because we're highly focused on deal execution, and sort of that real high touch service. People like dealing with my teams, and so it come back to us. And then underlying that, I guess, is the restructuring and bankruptcy activity. And we saw quite a lot of that in the US last year. So when market's up, we do well. When it's down, we do better. Those things have kind of come together to really allow us to continue to grow.
Yeah, it's great positioning. And actually, that what you just said is a nice little link back to the start of the conversation, you talked about coming out of big bank and offering a white glove service, perhaps for the underserved sort of mid-market. But it sounds now as if you're competing with the same banks. So some of the things you're doing are on the same scale. So I want to ask you, what is your vision for the business and how far along do you think you are currently?
So, I mean, we hit a significant milestone last year in terms of our revenue growth. So, really when, we started with £6,000 of capital and, we've sort of eclipsed 100 million of revenue now with a significant profit. I don't think it's a bit of a pinch me moment sometimes because I never anticipated that's where we would be. But it has given me a lot of confidence in where we can get to. And I think, we'll continue to, we want to at least double or treble that now in the next 5 years, right? So I think the sort of what I've said it just now is about what the long-term vision for us is really thinking about, look, we're moving in a digital age. We've always sort of one step ahead of our competitors, and we're thinking about how digital innovation is going to really transform the landscape around what we do. And we think, really we see ourselves being a digital utility in the long run where, it effectively is a real fintech, essentially where people can come and get their transactions done through a digital toolkit. So we're now thinking about working back from there and starting to really develop strategy around that. But another lever for our growth has been our international expansion. Last year, because there wasn't enough to do, we opened 3 organic offices, Dubai, Madrid and Melbourne, and we did 3 acquisitions, Paris, Hong Kong and Singapore. So, they've all added amazing geographic capability. We didn't have anything in Asia, so that was a real part of our strategic plan. And now we've got really significant boots on the ground in North and Southeast Asia. We think the Middle East is very exciting with everything that's happening there. Dubai is a start of the journey. We're also going to be looking to set up in Saudi at some point in the next 18 months or so, and some of the other regions out there as they're diversifying revenues away from oil. So there's a huge amount of opportunity, not only just to move towards that digital vision, but actually just to continue to build out in the locations we already are. And probably the other one that we're underweight in at the moment is the US. We've got a fastest growing office in the US, about 50 people so far. But really, that probably should be the largest part of our company by the time we come to in 5 years' time.
So you've done a lot in the last year or two. It feels like you sensibly waited until you had some proper scale and momentum, and then suddenly it's like, right, we're doing acquisitions and we're going into new geographies and we're sort of shifting up a gear. It certainly seems that way. Is it just the founders still, or have you got external money at this stage?
Well, no, we've got one of the things we did was we decided to get a professional investor after COVID. And to be honest with you, the part of the reason for that was because myself and my business partner, COVID had come upon us. I turned a significant age that year, as did he. And we weren't sure what was going to happen next. So we thought, maybe we should take some money off the table. So we were very fortunate and focused on getting somebody that was going to be founder friendly. And we've had a fantastic partner in Levine Lightman, who have continued to invest in us now. They're very happy with GLAS and everything GLAS has been doing with them. But yeah, we're still significantly invested in the business, as are a number of people that work for us.
Yeah, sorry, did you say who that was? Is that PE money, was it? Or...
Yes, Levine Lightman. They're a LA-based PE fund, but they have a growing European business here.
There you go, you heard it here. Very founder-friendly and growing in Europe.
Yeah.
Okay, so let's talk a little bit about the growth journey. I mean, that was fantastic overview of the business, all sorts of interesting things about what you've achieved there, and real scale, and actually real opportunity ahead as well. But you started from, well, practically nothing as far as I can make out, and you told that story of having to do several laps of the square mile to get your first contract. So perhaps you can talk a bit about what does it take? And this is both a startup and a scale-up story.
Yeah. Just to give you a bit of, I didn't finish off on my introduction, but perhaps just to fill in the gaps. So I left the Bank of New York when I was running their agency and trust business in Europe in the middle of 2005, just because the bank became really difficult to do business with. And I was just getting a bit fed up with all of that stuff. And I had an opportunity to work with a client who was a US law firm, a very small US law firm, that happened to do 90% of the legal work for the Bank of New York in the US. And at that time, pre-securitization, I mean, it must have been a huge amount of business, and they wanted to set up an office in London. Rather than me going to work for a competitor, which obviously I would have done, I said, actually, I can help you. I know all of the trustees in London. I know all of their clients. I'll go around the city and I'll knock on doors and I will get the business off the ground for you. But I'm going to call it Square Mile Connections, not your law firm, just in case it doesn't work out. So I started doing that towards the end of 2005, and I got myself a little office and started walking around the city. So I had some practice at this. And halfway round the city, these meetings, a lot of my trustee peers were saying, Mia, we're now in 2006. Everybody in the market, we need staff. Can you help me find people? So I was doing as a side hustle a little bit of headhunting. And the long and short of it is that it kind of was quite fortuitous, because the people that hired me at this law firm all left one day and went somewhere else, which then didn't need help with a London office. And of course, the one that was left decided they didn't want to open in the UK. So I had this headhunting business going on. So I became a professional headhunter for corporate trust and agency then for the next period of time, which was a great way to learn to run a business. And Square Mile Connections is still going today, although I sold it to one of the girls that worked for me when I got GLAS off the ground. So that took me on through to 2011. After the crash, a funny little thing happened there, actually. A friend of mine was the chief restructuring officer of Northern Rock, and he said to me, Mia, if you can find me a risk person, I can give you a bunch of jobs, because all my permanent hires just went on hold with all of that stuff in 2008. So I managed to find him a risk person, and it spurred me on. It kept me going for a while, but I thought, I hate recruitment now. I've got to get out of it. I want to get back to doing deals. So that's really what led me to start GLAS, when I started to think about how I could start my own trust and agency business, because I didn't want to go and work for anyone else at this point. So, yeah, I had an office, which was actually near the London Museum, which we used for initially, and sort of started all the planning and stuff like that. And then we pulled together a big list of all these companies to go and knock on doors. And started knocking around doors around the city the same year as the Olympics.
Wow. And that was literally door knocking, was it?
Yeah, absolutely. So anyone that would have us, take a meeting, I would go and meet these people. And a lot of banks, a lot of law firms, a lot of financial advisors, lots of networking with all the various things. And it was almost like people were always interested to take a meeting. I think they were a bit, skeptical, but it paid off in the end, and I did actually get that first deal.
It's about getting someone to put their money where their mouth is, right? Because I imagine, we're talking about what GLAS has become, and you've got this strong product market fit, and you've got a very strong niche. I imagine that was probably the case at the beginning as well. So, and you tell me, but I'm guessing you had good discussions, but then it was, but you need to be on some approved supplier list, or I have to stick my neck out for this because no one's ever heard of you and you're brand new. Am I really the first client? And it's getting someone over the line.
It was. And you know what? It really was that. So I think we nearly, this bulge bracket bank, which is very interesting, did come to us to talk about being an agent on their Formula One financing, which didn't come to fruition because I think we were too new, but that was a real opportunity. And then the one that came to us was, in the end, was a couple of law firms. So White & Case, Kirkland & Ellis were representing a company that had gone through a big restructuring, and their syndicate needed an agent. And there was only one other person in town on the other syndicate. So they were conflicted out. So they said, we've got a deal for you. And that was it.
And you have enough of those discussions, something's going to drop, right? That sounds like that was right place, right time.
It was. It absolutely was. We on the back of that transaction, we said we had our £6,000 of capital. We were using a free office, so to speak, and we were cash flow positive on that transaction within 3 months of starting. So that kicked us off nicely. Of course, I ran around the city and told everybody I've got a deal, and then everyone went, "Oh, well, we weren't the first." They didn't, they didn't mess it up. So the deals came after that.
So how long did 400 business meetings take in that first pass?
I think I was on the road about 4 months or so, really. I would say, kept going around. But this was physical meetings. There was obviously phone calls and stuff as well. But yeah, it was every day. There was a roster of people to meet.
Yeah. Yeah, well done. I don't know what I can say. I mean, look, we talk a lot about this at startup stage with various guests, and that's a sort of super graphic example of putting the hard yards in and sticking to it. So let's just talk about the startup and investment landscape a bit for a few minutes, if we could. I mean, you were self-funded with not very much money, and your first deal put you cash flow positive. That's the bootstrapping approach from bottom up. There's lots of other ways that you can start a venture, and there are lots of people waiting in various guises in venture and seed money and other sources to invest at varying stages of that journey. How do you see that, and do you have a view on access to funding and how easy that is for, particularly perhaps for female founders, right? Because as we said at the top of the show, you're in the minority.
Yeah, I mean, funny enough, for my previous business, that was, I found it very difficult to even get an overdraft from the bank, let alone anything else. And so, on this, I think it taught me a lot actually, but it gave me really good grounding to set GLAS up. And me and my business partner sort of said at the time we weren't going to borrow any money, and we would reinvest our profits back into, building the company up, which is really what we did. But I think it's really hard, and I've been giving this a lot of thought. I think, there is a huge amount at the time for me. Maybe it's a little bit different now. It's really hard to know where you go to access the opportunities. I think there's a lot more availability now online, I think, for people looking for startup money, but there really wasn't any option there. Even the bank, it was hard to get it. I think it is difficult, and I think females are, to a certain extent, maybe more risk averse. I mean, I'm not actually. I think I wouldn't be sitting here if I probably was. But, I think generally speaking, they're probably more risk averse, more conservative. I think it's very, very difficult for, a lot of female set up businesses. It's hard for them to scale it because, it's difficult to get to that next stage without having the right support around you, which is why there's probably so few of us. And even not just in terms of female entrepreneurs, but also female investors. I mean, that's another stat. There's hardly any female investors. I was having this chat with a very senior female investor last week, very successful. It's sad. It's hard for ladies to get on in terms of the investment industry. And I personally, would like to either see or, at some point in the future, be part of a completely different private investment financing solution, which isn't necessarily following the VC or the PE model, because I don't think that's necessarily perhaps maybe the best thing for female founders.
Yeah, just to sort of dig into that a little bit, what do you see as those barriers for female founders? You talked about having the right support around you, which perhaps is a bit of a reference to the sort of the current model of VCPE, but just to understand that from the female founder perspective.
Yeah, I think it's just difficult. I mean, just even knowing where to get help from, right? Where do you go? When you start a business, you normally go to your bank to get money, right? And unless you've got family and friends, I know a lot of entrepreneurs start with family and friends' money as well. But, it's really about having access to finding the right investor who's going to help you build your vision. And I do think, you've got to figure out what it is you want to get. Is it a lifestyle business? Is it a business you want to sell in the future and scale, or something else? But having some of those things kind of really clear. And I can't say that I completely was. It was well beyond. It was definitely on the scaling and building something. It wasn't a lifestyle business, but a lifestyle business is absolutely fine, right? And that's no issue at all. But I think having a very clear strategy on why you want to be an entrepreneur at the beginning is, if I was going to go back, I would have probably asked myself the same question. That will help you set your path to find those investors or whatever it is around you to support you through your growth. But obviously, it takes a long time to find the right investors, and I just don't think that is easy to navigate.
Yeah, and I think the right investors are also guide and mentor, and getting those folks involved early on, because the same thing with the consulting business on my side. We started with about the same amount of money that you did, actually. I think it was £9,000, and spent most of it buying the URL for the business and a little bit of setup money. And you don't know what you don't know. So you might say, I've got ambition and I've got a particular service and product proposition for the market. Okay, that's a big tick, but you don't really know what the opportunity space looks like out there or what some of the accelerators might be. So for me, it would be a lot about that sort of guide and mentor input. And if you get the right people involved and they've got either access to money or access to advice, then they can bring other people in and say, well, this is how you should be doing the finances. These are the folks who can do the financing for you. This is how you can do the platforming or the geographic expansion and get the right people around you.
Yeah, 100%.
Yeah. Okay, so we're in violent agreement about the right way to start your growth journey. And any lessons that you've had, because you've been through all sorts of stages. You've been right from the bottom up, and now properly in the scale end of the market. Lessons from navigating what is essentially, let's be straightforward, really still a male-dominated industry, and perhaps your position as a disruptor there.
Yeah, I mean, to be honest with you, I'm obviously a massive advocate for, female founders and just females in certainly finance, right? Just generally. But it has never sort of bothered me really in the sense that it's been a challenge for me because I just use it to my advantage. I think my investor describes me as a force of nature. So I think it's like, at the end of the day, it's really about, I think you do have to do a lot of preparation. As I said, I have put myself out there in terms of making sure that I'm always present at all the, industry conferences and networks and all of that kind of stuff. And, I think, look, I've got a lot of very supportive, male clients, stakeholders, professional, business people that are so supportive and are very happy to, be part of support the success of the business through introductions and so on. You just have to build your network. I think it's really using a network as well. I mean, again, I love LinkedIn. I really do. And I think it's, if I spend time using it, and I say to my guys here, you're ultimately, you've got a network there you can utilize. You should be able to always get a warm introduction from somebody. You should never have to do a cold call. And I think it's just about putting the time in to work on your business as opposed to be in the business. And that really working. I mean, I'm doing it now. I actually put in specific, time every week to work on the business to take it on. You can't be in the business. You got to be away from it.
Yeah, and that is the sort of founder's mantra, working on it rather than in it, because you're in it, you're, I don't know, cutting the invoices or writing all the proposals, and actually you need to be working over the top, doing strategic partnerships, looking at amplifying the marketing message, my position, sort of being the outward ambassador of the business. So I totally get that. And it's an interesting point about LinkedIn. I saw a stat recently that said that less than 1% of the LinkedIn traffic is actually corporate posts. It's all about the individual persona and profile. And we've all got networks, and anyone who follows me will know that I've sort of started posting a lot more in the last month or two. And it's the digital version of what you were doing at the start, Mia, with what we're walking around the city, right? Making introductions, is getting your message out there, working the network. And there's a huge opportunity that lies in that professional network, but only if you put the effort in and make the connection.
Yeah, absolutely. And I also find it's useful to sort of be innovative, because I think one of the other things you said, what have you learned? I think it's also by being curious, always be curious. And, particularly there's so much opportunity. I'm very curious about, artificial intelligence. I mean, I think it's going to be great for businesses. I think you need to, as a leader, you need to understand it. You need to understand it to the point where you can figure out with your team how it's going to impact the business, but what's it going to lead to? So I'm constantly looking and reading information about where I think we can leverage some things, in our business for the future, because that's how you keep current, and that's how it's been very successful for us in the past.
When I ask founders and business leaders on this show what they wish they'd known, 20, 30 years before, and what they think are the important qualities to succeed, curiosity is number one, actually. It comes through time and again, and you've just got to have that curious learning mindset, whether it is AI, which is everywhere in the market at the moment and has got such promise, but you really need to understand what's possible and practical, particularly in a regulated industry. And there's the biggest problem with biggest obstacle with AI adoption at the moment is literacy, and those broader change mindset. It's not so much, do I know how to do deep reasoning in the latest language model? It's actually really just the practicalities and the understanding of how it's going to mesh with your business, with your workflows, and really move the needle. That's a whole other conversation.
Yeah.
Which inevitably comes up every time we have one of these discussions.
Yeah, we are actually, we have got a change team at GLAS, which is led by my Chief Commercial Officer, Joanne Brooks, and they're doing a fabulous job. But what I've been trying to we're working on now is we want our people to have a digital mindset, because I think, if you can achieve, it was actually some professor from Harvard was writing a paper about digital transformation. And I can send you the name after the show so you can quote it for me if you want. But basically it was about, if you could get your team to have a 30% digital mindset, your business can be very successful in actually executing the transformation, because there's a whole load of sort of emotions that people go through when you start talking about transformation and change, which then has a negative impact on the business. So we've been working on a culture here, which is really about, helping people get to a digital mindset in terms of ways of working, and not doing the same old, right? Thinking about, actually I could use ChatGPT, or I could use this, or I could use that, whatever it is, rather than doing the same old, Excel or what have you. So that's where we're starting that journey, and really just kind of giving people the time to innovate and think about things in a safe place. But really the workforces of the future really need to have that mentality. I hope, if companies are going to succeed in our digital age.
Yeah, and the landscape's moving so fast. So on one end of the spectrum, you get sort of Shopify CEOs saying, "I'm not going to hire anyone unless you can prove that an AI agent can't do it." And then at the other end, there are plenty of financial institutions that haven't really got off the bench yet in terms of AI learning or prototyping. And then in the middle, it's about that sensible adoption and going on the learning curve. And the market's just moving so fast. So if you're not in that trial and error experimentation cycle now and bringing the skill set and the knowledge up in the team, then you're going to get left behind. So yeah, being AI enabled, digital first, and really inviting the AI into every conversation as your co-worker. And again, there's lots we could talk about in that vein, but I think it's really important for every business to be on the front foot.
Yeah, agreed.
Yeah. So just looping back to something we were talking about a couple of minutes ago about really, if I can paraphrase, you were talking about playing it forward and being an advocate for women entrepreneurs going forward, and sort of I think you've been so successful and achieved a lot. So you're in a position where you, as you say, you could be part of the change and making things better going forward. So what are your thoughts on what should change, what needs to change in finance to create more opportunities for diverse entrepreneurs and for women founders?
Well, I think it has to start, doesn't it, from the sort of investment community to a certain extent, and anybody that's, whether you're in a professional investor, or whether you're, an advisor or what have you in that sort of community. Because, I mean, if we just take a step back, it's been quite interesting. So I know that the present US administration isn't a great supporter of D&I, but I think it's still, diversity does equal success. And there's millions of, successful stories about boards that are diverse, tips to be significantly more successful than those that are not. So, it needs to start really from the top. I don't think we should ever have a quota. I don't like the term quota for females on boards or what have you, but I think we should have a selection of diversity at every board table to make the right decisions about how their businesses are run and governed. And that needs to be in the investment community too. I mean, LPs, so obviously the limited partners that invest in private equity or private credit, etc., have been asking for diversity stats from their investors for years. And I always say to my investor, you've got one, audited every so often, but it shouldn't be. I don't joke about it at all, but I think it is important that they continue to ask those questions. But I think it's about what we talked about earlier as well, about the access to information, to getting information. And also, there isn't that many diverse entrepreneurs out there, right? So, is there a demand for it? But I think if the investors are able to change And again, I'll give you an example, a practical example. So before we were looking for our investor, obviously you hit the radar, people start following your company before you do an investment. So I had a stream of like private equity investors through the door. And I think there was like virtually one woman in the whole bunch, and most of them looked the same suit, same haircut, same. And I said to them, what do you differentiate yourself for, presenting to a, nearly 50 something female CEO and founder, how are you differentiating from the next, and they couldn't really converse with me on that. Didn't really have anything to say. So even at the level, if you're going into a partnership with a private equity investment, you really want to be sure that you're marrying the right people, right? So I think there's a lot that needs to change in terms of the culture. And some of them, like the current investor we have, has absolutely got it right, but still very few at that end of the scale.
Yeah. I think that's really insightful that it starts with the investment community, because that's oftentimes where the money's coming from. This is sort of top down for the sector. And for all the P folks listening to this, so you heard it here, same suit, same haircut. So we need some diversity. And I thought you were going to say the same finance bro gilets, those little jackets.
I'll leave those out. We can talk about that offline.
I'm going to lose all my PE friends. Okay, right. So we're going to run out of time because this is I'm really enjoying the conversation, but we're getting through it. So I think we've probably got another 5 minutes or so. But I wanted to ask you about future for the sector. What's next for GLAS and for you?
Yeah, sure. I mean, I've had a really exciting year so far. Obviously, we went round and integrated a couple of these acquisitions in Asia. So I've done a lot of travelling this year already. But, we're really focusing on, for us as a business, the digital transformation is really front and centre of everything else we're doing at the moment. But look, I think that's really the way forward. I mean, we've got a very open, focused strategic roadmap, and we want to deliver on plan. I think there'll be other opportunistic opportunities in our business, maybe more acquisitions on the way. There has to be a sort of true up of the industry. So like you said, financial institutions and banks, will want to consolidate somewhere, or, maybe they'll carve out some of their, cost businesses like the services we provide, and that's something that we'd be ready to take on. There just has to be a true up. The technology is not there to provide support to a lot of these very large organisations. But, private credit is a thing, and it's going to continue to grow and grow and grow. So from my perspective, I just see more opportunity to really kind of continue to be the leader in the space where people need these services.
Yeah, well, I love that. There's a little hint there. So if you're mega bank and you want to carve out your agency and trust services and you want to give them to the sector leader, and there might be a deal to be done there, that would perhaps get you to the next level on your growth journey in shorter hops.
Yes, absolutely.
Yeah. And so what would be your top takeaways from, a career that's still flying, but a career to date, and your founder journey to date? Your top takeaways for the aspiring Mia Drennans out there who are perhaps about to found something of their own, or just have, and are right back at the beginning.
Yeah, I mean, I think, the bottom line is it's to be fearless to a certain extent. I mean, I remember when I was leaving the bank and someone said to me, you're really taking a risk and all of this kind of stuff. I was like, well, bottom line is I know that if it all fails, I'll get a job. I'm actually going to be more employable than I would have been, without taking this journey to step forward. So I think anybody, I would always be saying to anybody who would think about starting a business, and I would have said it to myself back then, go for it, be fearless, take the risk, because you never know, it might just be the best thing you ever did in your life. And I can say, honestly, this is the best thing I've ever done.
Yeah, and if you don't take the leap, you'll never know.
Yeah.
I went through exactly the same process with forming Next Wave. And what I realised was that if you tell at least 3 people you're going to do it, then you sort of have to, because you've created an expectation. So it sort of forces you off the precipice to get going. So you have this idea and you say, right, I'm going to do this. And you tell enough people, just put enough structure around it, then there's a bit of self-propelled momentum at that point, and off you go.
Yeah, absolutely.
Super. Look, so as we wrap up, and I imagine with your expansion in the last year or so, you've got a fair amount of time on aeroplanes. We talked about holidays, but you also opened offices in all sorts of places as well. So that's a good place to be reading or perhaps listening to something. So I always ask what's on your playlist or your book pile. Anything interesting that you might want to share with the audience?
Yeah, absolutely. So actually, I'm listening to, at the moment, a book called The Lazy CEO.
Okay. The Lazy CEO.
That would give the right title. Great CEOs Are Lazy by Jim Schlecker. And it's actually very, very interesting. And I think it's really kind of goes through a lot of things I think sort of CEOs and founders think about, actually. So I think that's highly recommended. But I listen to a lot of podcasts because I don't have time to listen to a whole book often. So podcasts is certainly my new guilty pleasure.
Brilliant. And if they want to, anyone listening to this wants to find out more or get in contact with you, Mia?
Yeah, happy to. You can find me on LinkedIn, or you can reach out to on the show and get my contact details and drop me a line.
Brilliant. Well, thanks so much for taking time to talk to me today. Great conversation, lots of super insights in there, and wishing you and GLAS every success for the next phase.
Thank you so much for having me. I've really, really enjoyed it.
Thank you.
Take care.